Hi guys, and welcome to another edition of the Ask Nugget Show, where I do my best to answer the community's questions. This week we'll flood with questions about stablecoins. So I want to explain the different types. There's so many out there. I've picked a good mix of the different functions. When would you use one over another? What are they stable relative to? I want to answer all those questions for you guys today because Tether has been in the headlines. Now, to start off with, there's three basic types of stablecoins: fiat-backed, crypto-backed, and non-backed. And now we have some new varieties that are a bit of a mix of some of these types as well. So the first thing that I need everyone to be aware of is that whenever we're talking about fiat-backed stablecoins, they're all going to face the same issues that any company faces dealing with banks and the legacy financial system. We see that accounts are frozen, transactions are slow. This is where a lot of the friction arises, and that leads to a lot of these rumors and complaints we see on social media, I believe. Tether's grown from millions of dollars to billions of dollars, so we are going to see more cases pop up. Now, I'm not jumping to Tether's defense because they said that they were going to be, fully transparent and regularly audited and so on, and that just didn't happen. But at the same time, we do speak to companies that have tried to be audited, and the big accounting firms won't deal with them as soon as they see the word blockchain or cryptocurrency. It's a risk for them to legally sign off on something that could come back to haunt them further down the track. So I guess that's both sides of the argument and something to be aware of for all fiat-backed stablecoins. You are putting your faith and trust in central authorities, whether that's the bank itself, the website, or the company. So just be aware of that. The first one is TrueUSD by Trust Token. Again, all these are just saying that they're going to be regulated, fully audited, more transparent than what Bitfinex and what Tether has been in the past. The next one is Gemini. You guys have all seen the Winklevoss twins in the news, and they're launching the GUS dollar. Paxos, this one's just been adopted by Binance. Again, these are all pegged one-to-one with US dollars in a bank somewhere. Stably, the Stable USD, a smaller one you might not have heard of. And then we get into these slightly newer varieties. So Circle, the company you've heard in the news lately, have launched the USD Coin. And this one is not only backed by US dollars in a bank, but AAA fixed income assets and securities. And whether or not we're putting fiat backing or AAA rated asset backing, as we see with the next coin here as well, AAA Reserve, you're now putting your trust in other assets. So theoretically, these should all be always worth at least $1 US, possibly more if they're accruing interest or other income producing AAA rated assets, which means basically the highest degree of confidence that they will be repaid and not go broke. But what happens in a worst case situation? What happens if a fiat currency loses 30% of its value, or if there's a bond market crash and bonds lose 50% of their value? You're offsetting your risk. So even if it keeps the peg, it may lose, I guess, what you would call value, your purchasing power, if those underlying assets go down in value. Now, that's the same here as we start to look towards other currencies. So I'm not sure how this one's pronounced, but this has got euros underpinning it. We're starting to see more and more of these in local regions. In Australia, we've recently had OnRamp come out and said we're fully regulated by ASIC. This is going to be, another ERC20 token. BitTrade have come out and said that we're launching an Aussie dollar-backed stablecoin. So this is great to see, and I'd prefer little pockets where everyone has their own little stablecoin rather than having one huge company. If Tether was to come down, that's maybe more of a risk to the whole ecosystem than if we had all these smaller exchanges and coins and so on. So I don't mind seeing this. It's good for your local currency if that's how you want to hold value or store profits and so on. The next type is where we start to get slightly different again, in that they are underpinned by US dollars, but we're starting to build in smart contract mechanisms to mint new coins or reduce the amount in circulation depending on supply and demand. So Carbon on Hashgraph is one that's coming out soon. Bitusd is one that's been around for a while that rebranded from Coin, but you can think of these, as they're saying here, as an algorithmic central bank. So you're kind of offsetting that trust in the algorithm to produce more or to reduce the amount of circulating supply depending on the basics of supply and demand, but they should always theoretically have still that underpinning of dollars in a bank somewhere. The next one is slightly different again, and that's the Steam-backed dollar from the Steam social media platform. Now, you can redeem Steam, buy or sell Steam, and it has a peg to the dollar depending on whatever the price of Steam is. So obviously, if Steam's 10 cents, you need 10 Steam to buy one Steam dollar, and so on. Now, this hasn't always been pegged to the dollar either. So at the moment, it's trading loosely, but this has been as high as $10 and as low as 80 cents and so on. So this one's sort of lost its space in the ecosystem as a stablecoin. It's more just of a loose dollar value to reward content creators and so on now. The next one is Bitusd, and again, this is backed and over collateralized by BitShares, but BitShares went down the path of trying to make a lot of bit assets. So we now have BitGold, BitSilver, and these haven't really taken off. So they had a lot of issues early on. As you see, the 24-hour volume, $30 and tiny market cap. So these aren't really used, but these work on that theory that they'll always be over collateralized by BitShares. The last few here are the ones that I've got a lot more confidence in, that I really like the way they work. And these are the cryptocurrency backed assets. So Haven have launched NUSD. In the future, they'll have NAUD, Euro, and all the other varieties. Now, you can sell your coins for USD. So, if Ethereum's $100, you're going to get 100 NUSD when you're selling it. But the other function of a lot of these for the community, and where the Haven governance coin, for example, comes into it, is where you can mint and create more of this stable coin. Now, this has some interesting side effects that I'll talk about as well, but the fact is that this is 500% over collateralized. So unless Haven and what other cryptos that underpin it in the future drop 80% in value, this should always be fully backed in smart contracts on the blockchain. There's no guessing. It's all out there for you to see that it is fully backed. The next one to talk about is DigX. Huge fan of this. Gold-backed token, 1 DGX token equals 1 gram of gold. You can redeem this. They've got it in vaults in Singapore, and there's going to be other locations in future. They might launch silver and other coins. I know that personally we're working with some projects in Australia that want to put a lot of different commodities out there for you to buy in digital form, and you can walk into the shop and redeem those, or you can post those metals to you when you send them back in a token. So this is all very exciting stuff. Again, DGX is the gold token. DGD is the governance token, where you earn rewards and you get to vote and so on. And finally, the number one that I believe is going to continue to increase in market cap and really take some market share off Tether is the Maker and their DAI stablecoin. Now, the other night, a lot of these coins were going up to, $1.10, $1.15, and Tether's down to 85 cents or whatever. Maker stayed at around $1, $1, maybe $2, but it's certainly held up what I thought the best because of the way that smart contract works. And you can head over to that dashboard. You can see people that have minted more of this coin. So again, how does the stablecoin come into circulation? People can create DAI by creating these collateralized debt positions where you put up Ethereum, or in the future you'll be able to put up DigX and other coins. You put that up and it's over collateralized. The community and the maker holders decide how over collateralized do we need it? Do we think that a 500% over collateralization ratio is necessary, like Maker, or do we think we only need double the amount, and if it falls by 50%, the Maker contract will liquidate that position so that it's never under collateralized? There's always more backing up that DAI stablecoin than there is cryptocurrency underpinning it. So this starts to have some pretty cool side effects. People will want to get paid in stable coins. People might want to get paid in gold. Lending platforms, instead of creating a taxable event, even you might want to mint some DAI stablecoins from your Ethereum and use that stablecoin to buy other cryptocurrencies, and you can start to do some very interesting things once you have your head around all these different concepts and how this works. So I'm very excited for the future. Keep an eye on Make It Die. Check out that platform. Check out DigX if you want to take some profits in gold. Check out my tutorials on Kyber and all these decentralized exchanges where you can now take profits into some of these stable coins, guys. I hope you've enjoyed that episode. Hit that like button, subscribe if you haven't already, share these videos around, and thanks for tuning in, guys. Cheers.